So good morning, Cam. Welcome back to another episode of Trading Success. How are you?
Hey, Chris. Good day, everyone. Thanks for joining again for episode 11. So I think the story of last week, Chris, was all-time highs. We said NASDAQ was going to test that 19,000 level. That was the level that was standing out, and it did. And so, if you went long at the start of the week and just bought the market and, kept your stop under the Monday's low, you would not have been touched. So it would have been a really good trade that week. But anyway, let's get into the chart, shall we? Because there's some really important things to look at. And interesting to note too, I know that you've followed the astrology, but we had a massive full moon in Sagittarius last week. And quite often, full moons can bring up a lot of emotion, and it can on mass consciousness, and it seemed to have a profound effect on the markets as well. So shall we have a look and see what happened in the markets, and we can show you exactly how this happened, almost to the actual time of the full moon that we got a turn in the markets. It was 8:53 in the morning in Chicago was the full moon, and the markets turned pretty much around that point, like within an hour or two. It was just probably about half an hour before the market actually turned. So it's very interesting how this all plays out. And I'm definitely not an expert, but it was just something to note. So I think the story of this week, now today's obviously Monday morning, the market has just opened, and interesting to note what happened. So this candle here, I'll just change my cursor. This candle here was the Monday's trading.
Yep.
Now, Friday was an inside day, and on Thursday, we had this massive big move, and this is when we had the test of 19,000. So we had the NVIDIA results come out last week, and the markets were very, very bullish. This week, we don't have as much financial news, so I can't expect the markets to be too volatile based around any of those sorts of economic earnings. This week, in terms of financial news, and we will get to that in a moment, but let me just finish what I was talking about here. We can see here we've got balance rules applying right now. So this Thursday created a big imbalance. It was a big volatile day. It was one of the biggest candles we've seen in weeks, very similar to that bullish day there. However, the market did close bearish on this particular day, but on Friday, it followed up quite bullishly. Okay, but still we're inside this big Thursday's range. So this high and low of Thursday, and this, by the way, was the full moon day. By the way, this is the in the US in the morning. This is when the market turned. So that is showing you at what time the let's see, I've got the right chart. I believe I do. Yes, this is the 24-hour data. So I just want to show you this first. But anyway, all you need to know is that this Thursday was the high and the low, a very big range. Friday, we had an inside range, but once again, a very big candle, like a big body, big amount of price action. Then yesterday, which was a public holiday, so we had Memorial Day in the United States, and we saw a break of this high. All right. So if we were doing this podcast yesterday, this would have been a level that I would have been looking for the market to want to go and test.
Yep.
All right. So typically with balance rules, the market, what we're looking for is the market to test either the high or the low. Now the market opened on the high, and the natural place for the market to go was to test the high. So it tested the high and actually broke through, and it actually closed above the high. So now what we're looking for today, so this is today's trading, we've already started the day and we've started to sell off. So if we're looking for a long move today, I'd be looking for this level for support above this price level here, which is, I'll just change my cursor. Friday's high is 18,927, around that mark. Is it exactly? 18,925. Okay, that line's not 100% straight, but yeah. 18,925. We want to see support on the NASDAQ above that level. Now, if we do get support above that level, what I'm looking for, all right, is continuation of this trend up to this side of the balance.
Yeah.
Now, when we get here, which is a retest of 19,000, for a continuation, we want the same rules to apply. We want to see the market hold above, and then we want to see the market get back above. If the market fails up here, then we're looking for shorts. And particularly, we'll probably get a short pretty much all the way back down to the other side of the range. Right now, that's the longer term picture, which could happen this week. But even on the shorter term, what we want to see is if this Friday's high fails, we've already tested the Monday's high and we've failed. I want to see the market either, if it can't hold above this level, we're going to look for the market to get back under 18,925, and we want to see a test of, first of all, Friday's low.
Yep.
Sorry, Monday's low down here. All right. And if we break Monday's low, then we want to see the market go down and test all the way back down to Friday's low. And then once again, the same process. If the market can get out below this level, then we want to see it test this level. If it can get below this level, then we want to see it continue down this level. If it fails at any of these levels, so 18,680 or 18,621, we're looking for the market to continue back within this range. So this is what the scenario is. We don't have a crystal ball. We don't know if this market's going to continue to rally higher. But what we can use is these very strong reference point prices and look for price movement off those levels. All right. So first of all, today being Tuesday, we're looking for Monday's high and low to be tested. We're looking for Friday's high to be retested, and we're looking for potential weakness under that level back down to Friday's low, or we're looking for strength above Friday's high back up to Thursday's high. So we're in this balance range right now. Okay.
And on that, Cam, would you mark out, so because obviously on an execution point of view, you're taking it on a 5-minute chart, as a day trader. So would you mark these key levels on your daily chart to then give you obviously targets on your smaller timeframes?
Yeah, definitely. These are what we call support and resistance levels. So they're clear price levels that you would carry over onto your smaller time frames, and you want to see the price action on those smaller time frames. So your 60-minute chart, your 30-minute chart, your 15-minute chart, and your 5-minute chart, you want to see that all in correlation, and obviously executing on your 5-minute chart so you can get the best risk and best execution possible. But yes, these price levels are going to be very powerful horizontal support and resistance levels. All this week, I'll be watching these levels.
Yeah, fantastic.
S&P 500, let's have a look here. S&P's in a very similar state. So we made all-time highs on Thursday, and very, very similar state we're in here. Market hasn't come down to Thursday's low yet, so we're still holding up in above the 50% of Thursday's range. But once again, same rules apply. Okay, so this is Thursday. This is the Friday. You can see last night we've held above the Friday high, and now we're actually trading back and we're testing the Friday's high at 5329. So very much same process applied with the S&P 500. Oil is the next one we're going to look at. Now, we spoke about oil last week. We were looking for a trade above 78.50. Oops. once again, this market is still in this balance. You remember that balance that we've been working out? You can
I've
see
been
how
watching it all week too.
This has basically been 3 weeks of trading. So we're in a major balance area, and you can see how that balance zone that we marked up from back on the, on the 9th, 8th of May, that outside candle on the, what date was that? The 9th of May.
Yeah.
You can see how the market got above it, came back in, we tested the low, we failed, we went back up. So we're basically testing this balance range here. So I'm basically using that price range there. So 79.41 all the way down to 76.36. So we're in basically like a $3 range that this market is moving around. Now on a futures contract, a $3 range is a lot of money, because 1 cent on a futures contract, 1 cent of movement in the price of oil is actually worth $10 on a futures contract. On a micro contract, it's worth $1. So you can scale down your leverage if you don't want to use the larger leverage. But very important balance rules applying again, right? So if we see the market get above 79.46, which we didn't see last week, right? Last week was a fairly bearish week in oil. We never got the breakout that we were expecting. But we just don't know what's happening here in this oil market. But all we know is we've got the price ranges that we're working with. We're looking for basically longs, basically off 76.35 down around that level. Right, looking for the market to come back and fail and go long off that level. If the market can break 76, then we're looking for shorts under that level. But if we can get back above 79.40, around that mark, 79.50, and we can hold above that level, then we'll be looking for trades to 80 and then looking for a hold above 80, and then we probably should get a nice bullish rally. But we've seen a lot of price movement in oil over the last year or so. Well, this year anyway, since December, we've seen a very strong move up. And notice where we're failing is right on the 50% of that major price range, which is, I'll just readjust that 50 because it's just out of whack for some reason. So yeah, you can see how we're holding the 50% being that golden line there, being 76.56. We're holding above that level at the moment. So we're finding 3 levels of support here, and we've had 2 up days. I'd probably see, if we go to the weekly chart, what you'd probably want to see for this market to continue up, I would want to see probably a nice strong weekly bar would be a nice thing to see, because we haven't seen a nice strong weekly candle to the upside yet. We've had mainly strong selling bars over the last this is 1, 2, 3, 4, 5, 6, 7 weeks. We've mainly seen the sellers in play, but you can see how we've triple bottomed down here at that 50% level at 76.56. So that's your main level of support there. One currency that I've been looking at, which I've been interested in as well, has been the 6E, which is the euro versus the US dollar. Now, there's been some talk about a weakening US dollar, and we've seen that since basically mid-April. We've seen a bit of re-strengthening in the euro versus the US dollar. And interesting to note, we've broken out of this this longer-term trend line, or this medium-term trend line. We have a longer-term trend line up here, which we haven't quite got to. So if this market is looking like we've got out of this trend line, and we've come back into the trend line, and we're finding some support off that trend line, which is around about $1.08, or €1.08. So we're finding some support above that level. So if this market can break this 109 level, then I think that next port of call will be up around that 110 level. So could be a nice long setting up on the euro. But once again, it could take time if you're going to be taking this euro trade. It's a slow burn. But yeah, I think $1.10 would be or 1.10 would be the place to get out of that market. So that's an interesting one on the currency front. Next one is Bitcoin. Now, there's been a lot of hype this week with Ethereum and the talk about the Ethereum ETF being approved, or Ethereum ETFs being approved. So the odds of that being approved were about 10% a couple of weeks ago, but now those odds have flipped, and it looks like the odds of those ETFs being approved is about 90%. So we've seen basically like a $600 move in Ethereum, and that's kind of brought a lot more interest into other cryptocurrencies, and obviously Bitcoin is the one that we primarily focus on because it's tradable on the futures exchange. So we saw last week Bitcoin break out of those most recent highs. We've had a test of 73. Did we? I think we had a test of 72. Yeah, we tested 72 last week, and then we progressively sold off since then. But yesterday we had a fairly strong day, and we've retested this major trend line here again. So once this market can get above its trend line and get above this 76.4 fib, we're probably looking for some test of all-time highs again, up around 76,000. So that's Bitcoin. So this could be, if this fails up around this trend line, once again, similar to those balance rules, we'd be looking for potential shorts back down to the 50%. And then if you can get back below the 50%, then we could be going back down and testing these lows again. So, are we seeing short-term traders getting stopped out here like we saw here? We saw a lot of short-term traders getting in on leverage positions, and they got really whacked. You can see the market pull back. But looks like now we've found some support down around that 60,000 level, and the market has been swinging up since then. So we're in basically our third attempt to swing up now on this daily time frame. So Bitcoin's looking really interesting. I wouldn't be jumping in just yet for longs. I'd really want to see the market hold above these prior longs if we're going to go. And if it does get above, I think it's going to rally pretty hard above this level. But, I think short-term traders could get caught out buying here, and then that will bring in the contradictory trade or the contrarian trade, and those shorter-term leveraged long positions may get trapped and get flipped out of the market. If we look at the profile, bear with me, guys. I'll just update that. You can see on the profile, you can see where the market's finding. I'll just expand this profile over here. All right. So this is basically, once this profile updates, you can see this is the most traded price.
Yeah.
69,670 is the most traded price, is the point of control. And interesting to note, if you've been following these podcasts, the point of control was down around 68. So what this is showing us is that value is increasing. So it's just showing that people are prepared to buy Bitcoin at higher prices. And that is a sign, if you're seeing the point of control increasing over time, it's just a sign that the value of, or the average value of the Bitcoin product or commodity is becoming more expensive, and it's becoming more accepted at these higher prices. And you can see how the market is found some, basically it's finding a little bit of support here at that point of control at the moment. So once again, you can still apply the balance rules as well. If you're looking at Bitcoin on the shorter term, you can see we're basically in a 2-day balance. So you can see the Friday's high at 78.90 and its low at 68.935, around that level, around 68.900. They're going to be your balance zones. All right, so you're looking for support down here for longs, or if it breaks below 68.900, looking for shorts. If we get back above 70.900 or 78.90, around that level, then you'd be looking for longs. If we get a retest of that high and failure, then you're looking for shorts back down to the other side of the range. But so yeah, it's interesting how Bitcoin does follow the NASDAQ index quite closely. So they're quite highly correlated. So, Chris, that's about it in terms of the charts. Gold, did you want to have a look at gold?
Yeah.
See what gold's doing?
I know gold and silver, especially silver again, I think popped like nearly 5% overnight.
Let's see. I love this platform, right? You can just change these products very, very quickly. Yeah, so that's the gold price. So gold hit all-time highs. What day was that? That was just coming into the full moon.
Yeah.
And once again, you can see how we sold off the full moon, which is the 23rd. That was we sold off that full moon. Interesting, huh? Our markets can be affected by astrological events. But particularly after quite a decent rally, we had 3 pretty strong pushes over the last, pretty much over May. May's been a fairly bullish month for gold. We retested all-time highs, and then we turned down last week, and then last night gold had a bit of a rally, breaking this little doji. But look where the market actually came back to.
Yeah, it's right on it.
That major trend line, and it's bounced off it. So interesting how traders use these reference points as areas of support and resistance. They're not super strong levels, but they, at the moment, you can see that they're holding up on some of these markets. The bigger traders are looking at these trend lines. They tend to work, obviously better on a larger chart, the trend lines, than a smaller time frame. On a smaller time frame, there's just too much noise for really a trend line to hold up, exactly perfect. But on a larger chart, it gives you sort of a vicinity of where the market may find some support and resistance. So
yeah, I think it gives you a clear picture of areas to look for, and visually it just makes sense when you see it, doesn't it?
Yeah, that's right. It just gives you frames of reference, and that's what we look for as traders. We look for turning points, and we look for areas where we can get great reward for the risk we're putting into the market. And these are just indicators where we're looking for strength or weakness at those areas, basically. And that's how you handle support and resistance. And you don't need to have overly complicated rules. You just have to have some trust in those rules. Just make sure when you're trading that you're not risking more than you can afford. You always have to be very, very careful. And this is what we're seeing at the moment. We're seeing a lot of people flooding into trading, and they only think of the result. They only think of win or loss. They don't think of what's involved in creating the outcome. So, which means is having a consistent process that you can rely on. Like last night, we had one of our beginners webinars last night, and it's so awesome to see these young traders coming in to the markets, but you just realize there's so much they have to learn. And I know when I first started trading, you think you know more than what you actually do, and your overconfidence can add to a lot of errors. So I think the biggest thing that I can encourage our new traders or anyone looking to get into trading is to have a system of how you prepare. You know, what do you use for chart analysis? What are the consistent techniques you use? What is your rules around your execution? So when you're getting into the nitty-gritty, what are those rules around execution? What are the rules around the management of those trades? So risk, reward, and then when you're in the trade, when do you decide to close the trade out mid-trade? You know, when is the trade not worth being in anymore? Those sorts of rules. And then the final piece is just reviewing everything. And this is what I love so much about doing these podcasts is we get the opportunity to review what happened last week. And it just reaffirms the rules and the techniques that we use in the markets. And it gives us so much more confidence that what we're doing has a high probability of working.
Yeah.
And that's really what we're dealing with. You know, we're dealing with a game of probabilities, and it's all about following consistent processes.
Yeah.
So
keeping your risk small, and making sure you got a plan, as you say, so important.
Yeah, and that's it. Sometimes, you know, your first time into a trade doesn't quite work out. You know, sometimes you might need a couple of attempts on that particular trade for it to really show up. So, so that's about it, guys. So have a great week. I'm looking if anyone's got any suggestions on some amazing astrological traders. I'm really interested in that. Not so much astrological traders, but more people that are really spot on with the reading of the astrology, right? Even right down to the times of certain astrological events, because they do have an impact on price action, and this is something I've seen over and over again over the years, but I haven't really gone in and studied it. But it's something it's very interesting. So you can see from the charts I showed last week how, you know, markets turned off all-time highs right around the full moon. Gold almost also turned off all-time highs all around the full moon, and a lot of it was after, as well, you had those big earnings come out from NVIDIA on the Thursday and FOMC minutes. So you had a number of news events that also came out around the same time. And then you had an astrological event and you had a price action event. So you had confluence of multiple reference points, and then the market did a big turn. And that's when you can really, you know, maximize profit in the markets, is when you can really find like a cataclysmic climactic point where things start to turn, and they can turn very sharply. So
lots of opportunity, as you say.
Yeah. You know, very rarely do you get everything all aligning in one area. You know, it's when all those things all align, then you can almost save up your trading to that experience and just wait for that experience. That's where timing is so profound. And that's one thing that a lot of people really don't quite understand, is that how important timing is in making decisions.
Awesome.
All right. Thanks, Chris.
Fantastic, Cam. Thank you.
Have a great week, and we'll see you next week.
Will do. Awesome. Thanks
everyone. Thanks for joining. Hope you enjoyed it.